All right, let's jack in. So, the street looks at DJT stock and, they see a company. They pull up their charts, they run their numbers, they do their little analysis. But here's the thing. They're looking at it all wrong. This isn't a company. It's an anomaly. It's a loose string of code in the market simulation that, if you pull on it just right, might just unravel the whole damn thing.
And right on cue, our system's flashing red. We've got a critical mismatch. The official story, the one being pumped out by the suits on TV, it just doesn't align with the data on the ground. The signal is totally corrupt. So you know what that means? We're initiating a deep dive. We're plugging directly into the source code to figure out what is really going on here.
But before we go any farther, the mandatory guardrail. Look, this is just educational banter, okay? Think of us as data detectives, connecting dots that most people ignore. This is not, and I repeat, not financial advice. The market is a casino. The house has an edge. So, for the love of God, do your own research. Don't be the one left holding the bag. Don't be someone else's exit liquidity.
Okay, first, let's take a look at the simulation the establishment wants you to believe, the official narrative. This is the reality constructed by and for the people who actually think a spreadsheet can explain raw human behavior.
I mean, just look at the sheer absurdity of this. On one hand, you have the company's fundamentals. In its last reported quarter, it pulled in less than $1 million in revenue and managed to lose almost $55 million. And on the other hand, you've got the stock valued at over 1,200 times its annual revenue. Come on, this isn't just a disconnect. This is a tear in the fabric of financial reality. Now, the suits will try to tell you, oh, but it's a growth story. Look at the user base. Really? Let's check the data. Truth Social is an absolute ghost town compared to X. We are talking about 355,000 daily active users in the US versus almost 132 million. They're not even playing the same sport, let alone in the same league. So the point is, this valuation is not coming from the platform's performance. Period. And that brings us to the cynical, smart money view, which was honestly perfectly captured by a commenter from our source material. They see it as just a scam, a shell game, and look, based on the numbers we just saw, you can't really blame them for thinking that. But I think they're missing the real story here. So the official story is full of holes. The numbers are a joke. The user metrics are laughable. So what happens when you find a loose thread in the code like this? Well, you pull it. Let's see what unravels. This is the question, right? This is the one that should keep you up at night. If it's not a social media company, then what is it? If the money isn't coming from ads, and it sure as heck isn't coming from users, where is the cash flow actually coming from? We've just opened the loop. Now, let's follow the data trail. This number, $15.3 million. In the context of a company losing tens of millions, this figure it stands out. It's the anomaly, the ghost in the machine. It showed up in the company's financials, and it makes absolutely zero sense for a social media platform that's just bleeding cash. So where did it come from? And the answer is right there, straight from their own SEC filing. This isn't ad revenue. This is income from, get this, option premiums associated with its Bitcoin-related securities. Let that sink in for a second. This isn't a social media company. They're playing in the crypto casino. This is the glitch. This is the key that unlocks the entire puzzle. Let me be crystal clear here. A struggling social media app doesn't just randomly start generating millions from some unique Bitcoin strategy. This isn't a pivot, it's the entire purpose. This income stream isn't just a feature, it is the whole point of the machine. It's a backdoor, a way for the company to tap into a completely different energy source. And that, my friends, changes the entire equation. Now, to understand a glitch like this, you can't just stare at the one line of code. You have to zoom out. You have to see the state of the entire system. Because this anomaly, it isn't happening in a vacuum. It's a symptom of a much, much larger system crash. This framework, which we pulled from the comments in our source material, maps out what we're calling the Desperation Cycle. It's the grim path people take when the system fails them. First, they burn through savings and unemployment. Then, they cash out their crypto. After that, they raid their 401ks. And finally, the house is gone. This is the financial and emotional state of a huge part of the market right now. And hey, don't just take some random commenter's word for it. Here's the hard data. The combined number of people on continued unemployment claims, plus those who've been unemployed for over 27 weeks, is sitting at nearly 3.7 million people. And this is a lagging indicator, which means the reality on the ground is probably even worse. The fuel for that desperation cycle? It is plentiful.
And the pressure is just coming from all sides. You've got small businesses getting crushed by tariff debt. You have middle-income families getting absolutely squeezed by inflation. The whole system is just printing more money, which cheapens the dollar even further. The entire economic machine is groaning under the strain. This isn't a healthy market. It's an unstable system, and it's looking for an outlet.
Okay, so we've seen that the official story is basically a lie. We've found the glitch in the code, and we've seen the unstable macro environment it's all happening in. Now, it's time to put the pieces together. Welcome to the ape theory.
So let's define our terms here. We're calling this a chaos asset. It's not a stock in the traditional sense. It's not a company. It's a financial vehicle whose price has nothing to do with earnings or user growth. No, its value is directly correlated to the level of chaos, distrust, and instability in the system itself. The more the world feels like it's breaking, the higher its value goes.
So let's deconstruct this machine, piece by piece. The asset, the vehicle itself, is DJT stock. The engine is that weird anomalous income from Bitcoin options. That's the glitch we found. The fuel? That's the raw, desperate energy of a population watching their financial security just evaporate. And the narrative that ties it all together? Pure, uncut political and systemic chaos. It's a bet against the system itself.
So why on earth would anyone make this trade? Well, this quote from Morgan Housel explains everything. People aren't trading the DJT balance sheet. They're trading their personal reality. When your own world feels chaotic and rigged, when you see small businesses failing and your savings disappearing, well, that becomes 80% of how you think the world works, and you start looking for a trade that actually reflects that reality.
And that brings us to the final analysis. We've laid out all the data, we've presented the theory. The question for every single trader looking at this name is simple. Do you have diamond hands or do you have paper hands? Which reality are you placing your bet on? This slide really just lays it all out. There are two competing realities you have to choose between. On one side, you've got the official narrative, the suits, the spreadsheets, the fundamentals. They see a broken company that's going to zero. But on the other side, you have the ape theory, a sophisticated financial vehicle designed not to build a business, but to harness and profit from the breakdown of the system itself.
We are watching this chart like a hawk. While you wait for the next candle, grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVDA stock on Moomoo. Links are in the description. Smash the like, subscribe to the tribe. Apes together strong.
And that leaves us with one last provocative question. When you look at the whole macro picture, the political division, the economic pain, when the game feels this rigged, is a bet on fundamentals really the rational play? Or is the only sane move left to just push all your chips in on chaos itself? So we want to know what you think. Drop your theory down in the comments. Is DJT just another meme stock, another pump and dump just waiting to happen? Or is it something new? Is it the first true chaos asset? Let's decode this thing together.